So, happy Thursday, everyone. Greg Dixon here. And for trend trading for financial freedom, it's one of the many things I do. It's kind of a hobby. I to dabble in stock and crypto uh, trading. And what I mean by trading is I have mostly a swing or day trading approach to things. And the main philosophy of my program is to trade when things are trading, buy when things are trending up, and sell when they're trending down. And I just want to say that it's easier said than done. I had trouble following my own advice in the last swing, and I'm just going to go over some of the reasons why that was a mistake and what to do about it. So I'm just going to share a screen here. So Uh, this is uh, this is Bitcoin, and I don't know if you can see here. Um, Bitcoin here had been going along. It was for a long time this year. It's easy to look like a genius. All you had to do is put some money in there and watch it grow, and then kind of went sideways for a while, and then made this big jump, right? And I followed my methodology, and I bought quite a bit coming up here, and then come down, and you get to the top, and the challenge is knowing when to get out. So so it fell down. Now for this is probably pretty much a solid week that it declined quite a bit. I don't know what the exact percentage is. Maybe that represents maybe 15% over about a week. And what I caught myself doing is instead of selling out and consistently selling out, you get these little bumps during the day where it's turning around and it's looking a little bit like that, right? And you say, oh, okay, it's that's just a temporary downturn, and so I instead of selling, I bought more, and so next thing you know, you're doubling down on something that's going down. So at the end of it, you know, I I was okay, but then it come up here, and this recent thing is, I might call this the Trump bump, optimism from the election going up, and pretty now everything's at historical levels. I'm just going to say, uh, many people voted for Trump because they expected this to be a good financial thing, and this and here this is kind of vindication for it. It's kind of vindication in stock markets, and they're up. All I have to say about this is, I think there's going to be a downside to that that people haven't totally appreciated here. Uh, if you're a Dune fan, uh, I would say it's like handing over Arrakis to the Harkonnen. If you want a Harkonnen-esque world, that's what you're going to get. Maybe things will turn out to be okay, and he won't do what he said he was going to do. But I think there's cause for concern. But meanwhile, we're just talking about this money. This is going up at historical rates. I think some cryptocurrencies have gone up over 30%. Bitcoin's gone up, I don't know, 15% or something to historical levels. And what I'm saying about this is it's already leveling out, and it's uh, I what I've been doing is I yeah okay, the other lesson I want to say is day trading. This is Any day trader would tell you this, is you try to avoid holding things overnight, right? Because if you, the trend I see is things are doing pretty well up to about 11 o'clock in the evening, and then say, well, I'm going to go to bed hoping it continues. Well, more often than not, it doesn't. It dumps over the evening. So I don't know if you could follow something that you generally follow and see if you see that pattern. So the moral of the thing is, if it's going sideways at 11 o'clock at night or something, better to sell off some of that, reduce how much you're holding, how much you're risking overnight, and then you may wake up in the morning and it's continuing to go up, and wow, that's good. But I'm going to just show you here on this screen here. It's a little small, but here, right there at that peak, and that drop, if you just continue to hold on stuff, let's say I'm just going to say that's a 10% drop. So then it's got to rise 10% till you break even again, right? And if you're holding on to this and holding on and praying, hoping, then you've lost some opportunity. So if you're very reduced your amount of holdings there, and then when that you can throw that in, and you can take advantage of it. So instead of getting, let's say you got 10% here and 10% there, you'd have a 20% gain. Instead of that, you really negated your 10% gain by holding on, and then you're starting from scratch again, and it's really better if you can avoid holding on to things when they're going down. I'm just going to say again, it's hard to do. We have what I call the optimism bias. We think we want things to turn around. We want things to be better, even when what we're seeing in the charts is saying that it's not going to be better. So again, what the whole thing was no downside to selling the downslide. So if it looks like it's going down, definitely just sell it off. And if you've been riding something at the top, you're not necessarily giving up a potential profit. You're taking a profit. So if you buy well and then sell at a reasonable time, you're going to make a profit. I estimate you need about a 3% spread from what you buy it to and what you sell it to in order to make some money where it's at. So the other thing is, the lesson I'm learning for myself was I have to be much more sure of the trend before I buy, and much quicker to get out when things are not going the way I want. So there are times I trade in very small increments. Right now I'm just doing $10 at a time. So, and but you may have a larger budget. Maybe you're $100, maybe you're $1,000 at a time. But the numbers are all the same, whether you're doing small amounts or large amounts. The buy and sell price are the same. The margins are the same. Everything's the same. It's just what your comfort zone is. And if some people who had caught this trend and bought in for this bump that's happened this week could make a considerable amount of money. If you could add 10% to your overall portfolio, that would be pretty good. I'm just going to say it's kind of, the analogy is also like going to the casino. You're ahead by a lot. Time to pack up and go home. Take your money and go home, because the longer you stay, the more likely it is that the house is going to get your money back. And so this crypto especially is very fickle. It's all perception. This is on the perception that things will be better with the new government. We'll see how that goes, and the values go up, values go down. I don't think there's really anything behind crypto that's actually anything you call a fundamental. It's almost all perception and speculation. So my method is really just read the trend. Are people buying and it's going up, and you get in there, ride it up, and then get out when it's starting to go down. And I would say if you've gotten, let's say, a 10 or 15% gain, and it's starting to go sideways, that's the time to sell off stuff, and think of it as taking your profit at that point too. If it continues to go up, you can always buy in again. There's not much to lose. You're going to lose a little bit in the spread, a little bit in the commission, but you can, as long as you're following which way the market's going, you'll be okay. Anyway, that's my 2 cents for today, and have fun and go out and enjoy the world and enjoy your friends, love your family, and talk to you later.